Welcome back to U.S. Farm Report this weekend. Tommy Grisafi, Brian Splitt joining us. Well, coming off of that big USDA acreage report, boy, Brian, we came out of that 4th of July weekend seeing limit down moves for corn. Is it all about weather right now?
I think weather's a big influence. I think we had the idea that acres weren't quite what we thought they were, less than expected, but the change in the weather pattern and the increase in production estimates seems to have made up for that based on the price action. But we also have a little bit of a macroeconomic influence. You look at what's going on globally, we're seeing expectations that the UK is going to be ending their lockdown, yet we have Tokyo announcing that we're not going to have spectators at the Olympics due to COVID. And it does seem to be putting a little bit of a foothold in the macroeconomic sentiment, putting some negative trade influence with what's going on in the energies and the equities right now.
Tommy, I mean, when you look at the supply side of it, really a heavy focus on some of those areas like North Dakota coming out of that acreage report. We know they've been dry. You're actually in North Dakota this week, boots on the ground tour, looking at crop conditions. What are you seeing?
Well, the problem in the wheat is a big problem. And if anyone is in Chicago or New York or trading a hedge fund and they watch it rain in North Dakota and think it's going to save the wheat, for the crop that's dead, it's dead. So you don't need to sell it limit down like you did the other day, unless you want to. But the problem in the wheat is wheat's problem. Now, don't get that confused with corn and beans and what they have going on. So North Dakota put them down for potential to grow or planted 3 million acres of corn, over 7 million acres of beans planted in North Dakota. North Dakota's corn has a pretty good chance here of making a decent crop with a couple more spoon-fed rains. Soybeans a little too, we're not quite there. We need some August weather to have a better idea. But if you're watching the show this week and you're not selling corn or beans and you live in an ice states and you're growing a big crop, I think you're making a mistake. If you're scared to sell, I think you need to protect. And you've had 3 chances of protecting and selling above $6, and maybe you weren't interested in doing that. But as it rains and the 4th of July is over, and if some timely rains hit in July, we're seeing selling pressure on these markets. Not to mention what Brian mentioned, what's going on with the outside markets. There's some things brewing here. Sometimes you just got to admit that was our summer market and it's time to move on. Beans still have a story. Keep an eye on canola. There's some wild things that could possibly happen here into wheat harvest and canola harvest here in the next month.
Brian, I mean, if Tommy is telling us that the North Dakota corn crop, at least, is possibly there, does that change the scenario when it comes to prices? If we do see some of these dry areas that have had some rain this week, ultimately save that crop?
Well, there's been a big argument over the last several sessions of, we've got the extra acres that we planted this year were in the Dakotas. And so with that region being the area of concern, can we possibly raise trendline yields? And not to mention trendline yield that the USDA is currently using is 3 bushels per acre above our current record in real world application. So absolutely you get an improvement in the North Dakota and South Dakota crop. It's going to help raise our overall estimates. I think right now the trade is probably trading a number somewhere between 175 on the low end and 177 on the upper end. But think about how blessed we are. We've just had a limit down move coming out of 4th of July. We had another 10 to 20 cents tacked on after that, and we're still sitting around 5.25 December corn. We're still wildly profitable in areas that are going to have good yields, and we're going to have some areas that have record yields. So again, I agree with Tommy's sentiment. If you're not selling because of issues weather-wise going on elsewhere and not on your own farm, you really have to take a look at the type of profitability on a per acre basis you're looking at. And I think you probably need to raise your on-farm estimates based on some of the rain that's come through. Now, I understand if you're a producer that is not looking at a crop, you still have to be mindful of these chart points. And I can tell you the critical support in this December corn uptrend is $5. So if you don't want to sell bushels, and I understand that, you might want to have some puts under the market just in case. Let's remember what happened when COVID took hold a little over a year ago. If the money doesn't want to be in the market for some reason, they're going to get out.
So Tommy, real quick, I mean, you mentioned it earlier, but is it possible that this summer weather rally is over and that, prices, the high prices that we've already seen for at least the summer months may be behind us?
Yeah, it's very possible that the high is in for the year in corn. Now, could beans take another run at it? Absolutely. So I'm old enough to remember years we've grown big corn crops and then damaged the bean crop in August. it's not as much fun to trade corn. If beans continue to rally August and September, both based on a production problem and great demand, corn will get dragged up, but corn no longer wants to be the leader. So look for hard red spring wheat to be the leader, look for canola, look for soybeans. And I think corn would be the, if you were a spreader and you wanted to buy something and sell something, I think corn would be your short leg. That may not help the producer, but if you want to understand what traders do and hedge fund people do, they're using to look corn as a short leg.
All right, well, we still have a lot to talk about on U.S. Farm Report this weekend, so stay with us.